welcome back to the Don and Gino Real Estate and Finance Show right here in your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Well, happy Saturday, and I'm sure it's a hot one again today, but you can join us every Saturday, 9 a.m. to 10 a.m. right here on the Don and Gino Real Estate and Finance Show. For over 7 years, sharing what you need to know, want to know, and should know about real estate and finance and so much more. And if you tune in, you can obviously AM 1220, KHTS, or now FM 98.1. So I like to say that we're twice as good as we were for the last 7 years. 7 years we've been on the show with the goal of guiding you to personal financial wellness. So it's not just talking about loans, since that's what we do here at Skyline Home Loans. We're located at the Sunkist building right by Magic Mountain. You can probably hear the screams in the background, but we help you with the dream of home ownership and also with refinancing, whether you're restructuring, paying off debt, building up your home, whatever it is, we're here to help you. And you can find out more at SantaClaritaHomeLoan.com. That's SantaClaritaHomeLoan.com. Been out here doing it since 1985. I've been in the industry since 87. And today I'm excited because I've, traded up. I have a new co-host today that's in the know for you, because have you seen the market lately, the stock market, the volatility? Are you watching the stocks every day wondering what the heck is going on? Well, Gino's off this week on good behavior or bad behavior, I think. He's in Argentina and celebrating with the rest of Argentinians since they made it to the next level. So today I have co-host, back by popular demand, been on our show probably 24 times now, our personal financial planner, Mr. Chris Ingram with Ingram Financial Solutions. Welcome back, buddy.
Thanks for having me. I appreciate it.
And it's been good seeing you at the gym every day. I watch him, and I like, if I can only do 1/10 of what he's doing.
It's nice seeing you back on a regular basis.
I know,
you're not making the
drive
commute.
back and period. Yeah, that's true. Well, you only saw me maybe once a week there. Now I'm there 3 to 5 times a week, so it's good.
You're
it's good.
consistent right now.
Yes, it's much better.
Yeah.
It's amazing how much that helps.
It does, 100%.
Well, speaking about consistency, one thing that's not consistently is the stock market, and that's why we like to bring you in. And once you give us a little background of your background, so that, because even though you've been on the show a bazillion times, like I said, you help out our clients, you help out Gino and my finances completely. You're our guru regarding financial planning. You give us a sense of relief. I mean, how often do you ever get a call from me?
Very little. Yeah. Very,
Exactly.
very little.
Maybe Gino once in a while.
Gino's more active.
Well, that's only because he thinks he knows what he's doing.
Right,
So he's like,
totally.
hey, what about this? I read this.
Yes, he is. He is.
Me,
that
I'm
guy.
like, hey, and then we meet once in a while. I'm like, what about this stock or that stock, or should we switch it around? So you give me a calming sense of where my money is, and I don't worry about it because I'm not pulling it out today.
Right.
So based on that, with the market volatility, give us your background.
Okay, so this is my 20-year anniversary year of getting in this business,
Woo-hoo!
Which is very cool.
Yeah, it is.
Started back in 1998. I was a finance major at the University of Colorado in Boulder. I worked for Payne Weber when I was in Boulder, Colorado, and as soon as I graduated from Colorado, I came back to my hometown, which is LA, California. And I went to work for Payne Weber immediately in Century City here. I was there for a little while, went to Morgan Stanley up here in Valencia for a while because I really wanted my business out here. So I came to Valencia, started working for Morgan Stanley, and then in 2003, which is 15 years now, I started my own practice, and it's been that way ever since. So the last 15 years, I've been running my own financial services firm, and just been loving every minute of it. Yeah, it's a good thing.
Well, I know you love it because, like I said, I know you personally. I see you at the gym probably 4 or 5 days a week in the morning, but you have a sense of calm. You like what you do, and you know it gets busy, and you're basically a therapist at times based on what the market's doing. So, based on that, with the volatility, what is causing all the volatility, and how are you handling that for your clients right now?
So, right now I try and remind my clients fundamentals. Look at what's going on underneath all of the noise that the media is throwing at you, and then look at history. History is very important to kind of assess or demonstrate this type of situation when it's happened in the past and what the results have been. And so you can go back to, I think it's 2012, 2015, other years that were very, very volatile when everybody was calling, Greece is going bankrupt and, they want, all these things are going on and people want out. And then you look at what happened after that. Once the noise settled down, the market continued on its rally and moved higher. So right now you've got another situation where that's happening. There's a lot of volatility. There's a lot of noise. There's a lot of uncertainty. This volatility is happening because people are uncertain, institutional traders and individuals, of which move the market is going to make next. Are we going up or are we going down? And so when there's uncertainty, you get this fluctuation back and forth. Every time there's good news, we rally up. People are afraid they're going to miss the next move higher. And every time there's bad news, everybody jumps out because they're afraid that the correction is coming. And so you get this bounce back and forth. The most important part is to kind of let the noise go and not listen to it. Focus on what your goals are, your objectives. If you're not touching this money, something you touched on a couple of minutes ago, if you don't need this money in the next couple of years, then fear of a correction is probably not that important to you. You make sure that your allocation is in line, your risk tolerance is in line, your portfolio is built to do what it's supposed to do based on your objectives. And then you let it kind of do its thing and not worry about the short-term moves in the market. Unless you need this money in 3 months from now, then you need to worry about it.
Right.
So I'm kind of just trying to get clients to understand again that we need to focus on the big picture, the long term, focus on what their goals are, what their objectives are, make sure the portfolio is still in line with their objectives and their goals, and then not pay so much attention to what's going on out there in the media. And you look at it right now. Economy is good. Corporate earnings have looked great.
Unemployment's near record lows.
Wage increases, so on and so forth. So good that you've got the Fed now that's raising interest rates because they're concerned about inflation and other things that come with a very hot economy. And then throw on top of it, everybody feels like these tax cuts we're getting are just fuel on the fire. I mean, it's an economy that's already doing well, and hey, you've got this extra stimulus that, oh my gosh, what is that going to do? And so you've got things really looking good underneath, but then you've got things like trade wars and tariffs and interest rate hikes.
That's the biggest volatility thing right now.
Right now it is because it
moves around like you said, Chris. I mean, 2 weeks ago was Italy is going to go bankrupt, and then you got the tariffs. Oh, it's going to be a trade war. No, it's not going to be a trade war. Yes, It is going to be a trade war. Yes, no, it isn't. Oh, Korea, that's going to be a problem. No, it isn't a problem. They're docking. I mean, all that can make you crazy unless you just, like you said, let somebody like you that understands the interior. Because I know, like, I can watch rates do the same thing. Right. I know exactly where rates are going based on the noise in the market and go, don't panic. We're not going to lock in today. This is just a temporary thing or a weekend thing or whatever. I kind of watch the same thing. So I have the same thing you have. When you look at history, we get nice little charts that basically tell us and tell me, back me up if you feel the same way. But I watch resistance and support lines based on history, and it's amazing how close they stay to those things. Am I right?
100%. I mean, we've seen this market. You throw a chart up there. I wish I had one that I could throw up for you.
We're going
guys.
to do that pretty soon. We're going to have a TV.
That'll be super cool because I love, you watch some of these, CNBC or things like that. They'll throw up the chart, and man, we have bounced off of support so many times, and then you get up towards resistance and you see this thing. I mean, we are trading in a channel. It's very predictable to some. It looks really volatile if you don't see the resistance and support lines. You start seeing the resistance and support lines, you almost feel like it's kind of predictable. It bounces down, and it bounces back up, and then it bounces down.
I know exactly. I'm like, oh, we're going to get rates are going to get a little better tomorrow. Oh, we're hitting resistance. Like today, we're hitting resistance. I don't think they'll get any better today. But what also is good when you know those charts is that when it does go outside that channel, then you know to pay attention.
100%. That's what I do is we watch those charts. You start breaking out above resistance. You start thinking, okay, breakout is possible, so let's pay attention to this. You start breaking below those support levels at the bottom. That's when you start to say, okay, now I need to actually reassess things and make sure that we're in the right places because it could slide out from there. But when you're in that channel, this is just noise. So you just kind of just let it go, take a deep breath, let it run its course, figure out what the next move is going to be. Take it day by day, and don't panic. Just
All right,
make good,
I know we
good
have
decisions.
to go to break here, Chris, but those, in case some of you out there have to, jump out of the car or get off the computer, because hopefully you're listening to this online. How can they get a hold of you if they want somebody that's going to help them stay away from the noise and basic key on their objectives? That's really what it is keying in on your objectives, and then the noise doesn't bother you, and you can relax because somebody else is watching. Because if things do move, you call me.
Right.
So how can they get a hold of you?
Exactly.
Chris?
So best way to look me up is my website, ingramfinancialsolutions.com. And my last name is spelled INGRAM. So ingramfinancialsolutions.com. It's got my phone number, email address, everything is on there. Check it out and look me up.
All right. So when we come back, Chris is going to go over the 3 ways that a financial advisor gets paid. A lot of times you go, well, if I hired a Chris, how do people get paid? And is it worth it? And how does that work out? So Chris is going to go into the details so you're in the know and can feel comfortable about what the options are and decide what option's best for you when we come back to the Don and Gino Real Estate and Finance Show. Don't go away. This is good stuff.